the conversation today is going to be staying clear of the Tennessee franchise and excise tax. And let me tell you guys about why this matters. Okay. Before we go into this, you know, you might want to put your phone away and get out your pen and paper, take some notes or anything else that's going to distract you. If you are a business owner and or a real estate investor in Tennessee, there are some hidden tax traps. And a lot of our clients are, while they think that Tennessee is this tax-free state and it has all these benefits, there are some really annoying, painful nuisances that we call the Tennessee franchise and excise tax. And Danielle and I and the rest of our team have spent hundreds of hours dealing with notices, calling the Tennessee Department of Revenue. We know them on a firsthand basis, and we have endured many hours of pain and suffering trying to decipher this Tennessee franchise and excise tax. And as a result of this, what I would say is, as a result of instances where let's say we had a new client and there wasn't proper planning in place, we have seen tens of thousands of dollars in overpayments by certain clients who had improper entity structures or were non-compliant with the state of Tennessee because they thought that they didn't have to deal with Tennessee because it was a tax-free state. Danielle, what are some things that you may have seen from people, from our clients dealing with this tax?
Yeah. So it sneaks up on just about everybody, right? A lot of times our clients will use the help of attorneys and they think, okay, Tennessee is this nice, friendly state. There's no income tax. And they don't realize that there's all these other caveats that the state has in place to, generate some revenue. F&E being the main driver there. And so it's often forgotten. And we usually come about this, especially from first-time clients, after it's already an issue. They're getting notices, they've missed due dates, they haven't done registrations, they have to start all over, maybe even go back a year or two or more. And then it becomes a bigger event than really it is. F&E tax is not a hard compliance to stay up with, but if you don't, it becomes a nightmare.
Oh, absolutely. And also, it turns all our entity planning upside down. So, for some of you guys who are listening to just general information and blogs and social media stuff on how to structure your entity and FICA taxes and S-corps, none of it matters if you are a business owner in Tennessee. Everything gets turned upside down because of this unique F&E tax. So, this is extremely important, especially for you as a business owner and or real estate investor. So what we're going to talk about today is, what entity are and activities are going to pay the tax. We're going to talk about how Tennessee franchise and excise tax is calculated so you understand the severity of this tax. How to eliminate the tax with exemptions. You may have heard of some of them. Tax strategies to minimize or eliminate these taxes. We're going to discuss how this impacts your entity planning. So, and this is a chance for you to ask us any question, and we'll talk about how we've done planning for our clients. Compliance obligations, Danielle, who has done this hundreds of times. What do you have to do to keep Tennessee out of your hair? What forms and websites do you have to go to so you don't wind up with a nasty gram from Tennessee? And then finally, overall, the mission of this conversation is to help you have the clarity and confidence to know what you have to do to keep Tennessee away from your life and out of your hair so you can continue to function and thrive without overpaying the taxes. So hopefully we will achieve that goal for you. So let's get into the details here. There's two taxes, franchise tax and the excise tax. Franchise tax is a 0.25% tax. It's an asset-based tax. It's based on your asset minus depreciation in your businesses. So we'll talk about what entities have this in a little bit. But the way that we look at this is when you hold assets and you're protecting your assets through these LLCs or other vehicles, they give you entity protection and you're operating out of Tennessee. Tennessee says, hey, I'm protecting you. I want a piece of the pie. And I'm going to evaluate based on the assets you have here. Now, 0.25% for most of our clients, when they find out this is the cost of your asset protection in this entity, it's probably not worth making too many changes here. So if we have $100,000 of assets, we're talking about $250 per year to protect it. And that amount goes down as you appreciate the asset. We have the excise tax, and this is a painful one, and this is going to impact our entity planning. It's a 6.5% tax on the net earnings. This can be painful, especially for our high income. And then there's a minimum franchise tax of $100 paid if you are incorporated, domesticated, or otherwise registered to do business in Tennessee. So even if you don't live in Tennessee or work in Tennessee, but you do business in Tennessee income, you're going to pay that minimum $100. And by the way, we see so many people miss this and freak out and notices. So what entities do we have to consider here? And by the way, if you have a question, just put it in the chat. Qualified or registered in the Tennessee or doing business in the state. If you are a corporation, S corporation, limited partnership, limited liability company, and business trust, business chartered trust. Now, what we see in most common instances is if you are an S corporation, limited partnerships, and also if you have passive income in a partnership LLC, that will also be considered here. So the biggest exemption, especially because we have a lot of real estate folks that we like to discuss, is the FONCE exemption. It stands for foreign-owned non-corporate entity. And this allows you to eliminate all of the franchise and excise tax. But Danielle's going to walk you through how you do this, by the way. But a lot of you guys who have rental properties will get this FONCE exemption. So you may be stressing out, well, I do have to pay taxes on my profits and then all the assets. So obviously real estate investing is asset heavy. So if you have $1 million in real estate, all of a sudden you have a 2,500 tax, even if you're not even profitable with the excise tax here. So we have the FONCE exemption that could potentially protect us from this. Now, to do this and have this FONCE exemption, we need to have passive income and we need to have it from investment type of vehicles. And for most of you guys, what that is going to mean is royalties, rents from residential rentals, farming, passive income, dividends, interest, annuities, and gains from stocks or securities. Now, here's something we want to keep in mind here on what Tennessee defines as residential property. It does not include commercial real estate. It does not include multifamily, 4 units or more. And then we have office, self-storage, that's not included either. And then our passive shares in an active business. So what I mean by that is if you do not materially participate, if you are a passive limited partner and you're just collecting a K-1 for a business you invest in, that will be subject, you will not be exempt through the FONCE exemption on that type of what you may consider investing income here. So, and then a key topic that a lot of our clients are concerned with, especially for our Smoky Mountain investors, is what about the short-term rentals? Does that qualify for the FONCE exemption? And most instances, we will find that the short-term rentals will qualify for the FONCE exemption. It has to do, Danielle, I know you've done this a little more, you looked into this a little more than me, but it has to do with the zoning of the rental property. And what we typically find is it's very unlikely that we will have to classify it as non-residential. So we still get the FONCE on short-term rentals. There's also an obligated member entity exemption. We will occasionally do this. If you are a limited partner and you are subject to this franchise and excise tax, which can be really challenging, you have your obligated member entity exemption. So if you are responsible and liable for the debts of the company or other liabilities, and you're taking on risk that is not fully protected by your entity, you can file the obligated member entity exemption. And that will allow you to also be exempt from the franchise and excise tax. But I am very hesitant to recommend this these days because you are losing the protection of the LLC. You're saying that you have unlimited risk exposure. So you are fully liable for the whatever could go wrong in this entity. So why do you have this LLC to begin with? So it kind of defeats the purpose of the asset protection. But sometimes the tax savings is really good. It might make sense. So some of the things here. Now let's get into planning opportunities. So let's say that we have income that we can't get out of the franchise and excise tax. Well, one of the things we could do is shift our expenses towards those activities. So we have passive partnership income and or other types of vehicles that we're paying the taxes on. Where can we allocate our expenses where we have the ability to actually impact where they go? Where can we move expenses to those items that are taxed most heavily? Additionally, a lot of you guys are going to create sole proprietorships because you get hit with because the franchise and excise tax really takes away the advantage of an S-corp. So you're going to be more inclined to shift your expenses to your active income because now you're paying a lot of FICA taxes. So we're moving our expenses towards the business activities that are going to be taxed at the highest rates when factoring in the franchise and excise tax. And also because we're trying to avoid it, we may have FICA taxes. So we may be moving income towards those sources with the FICA taxes as well. What you need to know is you want to consider, because of this franchise and excise tax, what income sources, if you have multiple income sources, is going to be taxed at the highest amount. And any chance you have the opportunity to decide or direct expenses towards different activities, you'll factor that in to determine where your write-offs are going to give you the best bang for your buck. So activities, so some of you guys using the Augusta route, for instance, you will be more inclined to have activities that will create tax write-offs to offset a certain business activity than another. So you can plan events around that. Meal, travel, hiring your children, all those things, you have the opportunity to decide what business activities are going to incur those costs. So you can consider that. Another consideration here is again income shifting. Again, where if we have the opportunity to direct income based on our structure and business activities, foundational write-off strategies are going to be impactful, especially where we consider the fact that some of this tax is based on the net income. So any of our strategies that we teach, like cost segregation, like being resourceful with our write-offs, some more sophisticated entity structuring vehicles, or when we talk about retirement account strategies, hiring the family, using medical related tax deductions. All these things are going to reduce your income. And so for the portion of the tax that is driven by income, which is taxed over 6%, we're getting an additional tax savings on the state side on top of federal. And then entity structuring, the big thing you want to know here is unless we know exactly what your profit's going to be, we're likely going to be avoiding your S corporation because your S corporation is meant to avoid your FICA tax, Social Security and Medicare tax. Well, I don't trust the government, and a lot of our clients don't. But the thing is at least when you're paying your FICA taxes, you're paying into a future benefit. The Social Security will eventually come back to you. When you pay franchise and excise tax, your money's gone forever. Tennessee's never going to thank you or pat you on the back for paying the tax. So typically what we will decide is instead of reducing our Social Security taxes and then having an S corp, though, while it does that, it increases our franchise and excise tax. We prefer to pay the Social Security taxes because at least it's an investment into our future retirement account savings, and it keeps us away from the franchise and excise tax. And the reason why also is because any income subject to self-employment tax, aka Social Security and Medicare tax, is not subject to the income-based portion of the franchise and excise tax. Um, and also, what we will also see is sole props, when especially for high income earners, are taxed at a lower net, uh, a lower bracket, or an overall lower rate when we factor in the franchise and excise federal. There are other alternatives to reducing self-employment taxes. So a lot of you guys are going to have ordinary businesses and you're going to be stuck paying these self-employment taxes to get out of your franchise and excise tax. So what other things can we do to reduce uh, self-employment tax? Oil and gas investing will reduce your self-employment taxes. Fringe benefits that you can create for hiring your spouse can reduce self-employment benefits. Creating fringe benefits related to medical deductions to do it as well. Hiring your children, again, if they're minors, they don't pay self-employment taxes. So these are all ways. Any general strategy aside from the S-corp will be even more valuable when you're operating out of Tennessee. And then I'm gonna let Danielle take it away for the really exciting stuff on your compliance obligations and how you keep Tennessee out of your hair on the compliance obligations. And I know some of you guys listening are like, oh, I think I know I should have done something. Like, what form do I need to do again? So, Danielle, why don't you take it away here and talk about the compliance portion of it?
Yeah, absolutely. So again, as I had mentioned earlier, this is not an overly complex filing process, but it is one that we need to handle carefully. So overall, if you are a calendar operating business, some sort of Tennessee filing is due on April 1st. April 15th. If you are a fiscal year business, you're going to file that return on the fourth month ending your fiscal year. So for any of these filings, whether we're filing for the return itself, whether we're going to put an extension in place, whether we're going to do an exemption, all of these must be in by April 15th. One thing that I do want to point out and make very clear regarding our FONCE exemptions, a very large portion of our clients subjected to the Tennessee F&E do qualify for our FONCE exemption. However, there's a couple pieces of information that we need to dig deeper on this. So FONCE stands for your family-owned non-corporate entity. So in order to be eligible for a FONCE exemption, your business needs to be family-owned. So husband and wife partnerships qualify. The piece to this that is not well known is that if you are operating in an LLC and you're a single member LLC, we can also still consider that family owned, even though you're one person. You're not more than one person. So
I said
that's
foreign owned,
one piece
so
of
sorry about that. That way, I said foreign owned. It's family owned. It's like
family owned.
mhm. I was right.
Um,
Danielle was right.
so that's an important piece to this. We do have sometimes clients that come to us and they're like, "Oh, yes, I can do the fonts, exemption," but maybe they're in an LLC with a third party, and that does not qualify for this type of exemption. Again, outside of fonts, which is the most commonly filed exemption, there are 6 others. Mark mentioned the OME. We have done it in the past. Again, it's not something we recommend, and it's usually not something that a client opts into when they first do their registrations, which means we have to go back and rechange your registration as if you wanted to select this exemption but didn't. So there's a little bit more to it than just filing the OME exemption. We actually have to go back and redo registrations first. So it becomes a little bit more complex. And again, it's not something overall that we would generally recommend. When it comes to filing your Tennessee extension, if you are not eligible to file for an exemption, we have to either file the return or file an extension. If you're going on extension, if your numbers are not in, if we don't know what the business is going to end up looking like for the year, we're going to have to put that extension in, again, because we need the calculations of both the excise piece and the franchise piece. That extension will extend you through October 15th. However, the $100 minimum for your franchise tax is required to be paid with that extension. So sometimes we'll put you on extension, we'll give you the option. You don't necessarily have to make a payment with your federal or other state extensions. Again, it just means that we're extending the time to file. You will have to pay at a later date. You have to pay your $100 minimum fee when we file your Tennessee extension. If we file the return, then we'll do the calculations and let you know what's due at that time.
Ready for the next slide?
Yep, please.
Cool. Let's get into it.
Okay. So when we file your F&E return, what information do we actually need? Aside from gathering all of your business information to put your return together, there's a couple of additional pieces of information that are required. Most importantly, we need your Tennessee 10-digit account number. This is something that needs to be filed for and registered with the Tennessee Department of Revenue. If you have not done that, we can always provide you instructions on how to do that. You can do it on the Tennessee website. However, we cannot file that return or that exemption or extension without that 10-digit number. We need to know the date your Tennessee operations began. Sometimes we have clients come to us and they're like, oh yes, I created this entity 2 years ago. I didn't really do anything. Now I'm in business. Well, once you make that registration, if it was back in 2023 and you're starting operations in 2025, at some point, Tennessee is going to send you some notices and say, hey, you registered 2 years ago, whether you're qualified for FONCE, we need to get that filed. If you're not, they're going to look for their $100 minimum fee for 23 and 24, and then we'll work with what 25 looks like as your business gets up and running. So we need to know the date of the operations to put on those forms. And then if it's helpful, your Secretary of State number, again, it could be found on the Secretary of State website. We can do a search, so it's not something we necessarily need you to provide. I have those resources to be able to do that on your behalf. However, it is helpful because when you get notices from Tennessee, they will have both your account number and your SOS number on those. And then if we're filing for your FONCE exemption, aside from having all of your business information, if you're an existing client, we already have this. But sometimes our newer clients that we're just getting acclimated to in our systems, we cannot file a FONCE exemption if we don't have at least one rental property listed on that exemption. The exemption only allows us, I think, to report up to 4. So if you've got 20 properties, obviously we're not listing all of the addresses, but we are required to put at least one rental property address on that form. So if we don't have all of your information yet, we will need to acquire that as well.
Great.
All right, so just touching briefly here, as I mentioned, if you do not have an account number, we must register one before we can file anything. So again, if you're already getting these notices, we can call the state. We have a very personal relationship with Tennessee DOR because of how often because of how often we deal with this. But we will have to put just kind of them on alert that we're working on this, but it will delay our ability to help you address these notices until you have that account number. You can go right online and register for it. I have linked it here for you. You should, if there's no problems or if the DOR doesn't need any additional information from you with your registrations, receive that 10-digit number almost immediately. If you haven't received it immediately, you'll be contacted by the DOR separately, asking for whatever additional information they might be looking for before they'll go ahead and issue that number for you. Once you get that, you just send it to us and we'll take care of the rest from there. If you know you've registered with the Tennessee DOR, but you have no idea where your account number is, you don't remember seeing it, you're not sure if you registered or not, we can do, again, a search on their website as well. So it is something that we can do on your behalf, or you can do it following the short few steps that I've listed here for you. You would essentially just go to the linked website browser that I have there. You would drop down the account type that you're looking for your franchise and excise tax ID number. You would put in your employer ID number, your federal or excuse me, your ID type would be your federal ID number. Then you would enter that in, and you're going to state that yes, you are a certified user to be able to look for this information. And it's either going to say, yes, we have your ID number. It is FAE with the following 10 numerical digits, or it's going to say, no, there's nothing on file, indicating that you'll likely need to go ahead and register. So in a nutshell, that wraps up Tennessee, either the filing of the return, the filing of the extension, or your exemptions. However, Tennessee is a little bit more complex than just that. And oftentimes, clients have no idea about these other reports that might be due, and they always come to haunt you at the most crucial of times. So oftentimes clients will be trying to close on properties. They'll be trying to work with a bank for lending. They're looking for new deals. And then we do, lien searches, or, we have to make sure all of their tax returns are up to date. And then they find out that they're not in good standing for one and or more of these items. And then it becomes a problem. Again, we work closely with the Tennessee DOR, but we can only go as fast as their systems will allow. And sometimes when you're at the closing table, or you have an expected closing in 48 hours, sometimes we just can't get things to move that quickly. So we want to make sure we're staying on top of not just Tennessee F&E, but all of these other compliance obligations, to make sure that we never find ourselves in a position where this is hindering us to be able to move forward in some activity in our business. So our AR standing, which is your annual report, this is the part that's due on April 1st. So again, it's due the 4th month. If you're a fiscal year filer, if you're a calendar year filer, it's due every April 1st. You go right online, and in your account that you create with the Tennessee DOR, you can file this annual report. There's no money due. It's literally just filing an informational report of addresses and owners, etc. But it needs to be filed. Your RA standing, this is your registered agent. Again, most of the time this is taken care of when you do your initial registration. As long as that registered agent that's continuously listed on your annual report and your other documentation has a valid Tennessee address, chances are you'll never have an issue with this, and you'll always have good RA standing. And then there is an other requirement piece, and this encompasses business licenses, tax registrations, and other compliance reports. It also includes a business tax return. This is the most sneaky of all of the 4 compliance obligations here. People tend to completely miss on this one. So if you have revenue that exceeds $100,000, you must file an annual business return and obtain a standard business license with Tennessee every year. This, of all of the other items, is something that we cannot file for you. It has to be filed through your online account. You will have to make a payment when you file this, depending on what that revenue price point is. You'll need credit card information. It's not something that we're able to do on your behalf. We don't have all the access to put in all that information. Again, you can go right online and file all of this. If you are ever wondering, am I up to date on all of these? Am I in good standing or am I not? How can I find out? We can simply do a business search on the Secretary of State website, and it will very clearly tell us for each one of these components whether you're in active good standing or not. So you can know in just a couple of seconds whether or not you are being compliant. Maybe you're filing some of these things and you don't realize what they're called or what you're actually doing, and you're staying in good standing, or maybe you're not. Maybe you're getting an email reminder for some of these and it looks potentially like it could be spam and you just kind of disregard it. Maybe it does go to your spam folder and you're not sure. The annual reports, I do believe, send email reminders to the email of which you first originally registered. So at any point, if you're ever concerned about any of these items, you can always reach out to us as well. And we're happy to just do a quick search for you and let you know what you might be missing. But again, these always come to haunt our clients in the most crucial of times. So we want to make sure we're not just paying attention to the tax filing piece, that we're also paying attention to these other filing obligations.
Right. And how often do we see, things are, we find out that our clients' entities haven't been renewed for the past like 3 years. And then it comes out back and haunts them at the time they need to have all their ducks in a row. And it's most important.
Yeah, we often deal with at least one Tennessee related issue monthly, if not more. Sometimes we have several clients working through them at the same time. But I would say that at least every month we are working on at least one compliance obligation that we're trying to work through. So it happens very frequently. And it is very frustrating. And especially in a time of need, we can't often clear these as fast as maybe you would like. You may think, oh, I just submitted it, so I'm good to go. But the systems don't update that quickly. So if you've been notified already after the fact that you're delinquent on something, it's just going to kick the ball down the road. And it does become a major frustration.
Yes. Right. Yeah. And then you have your penalties and interest accruing as well. And we can't always get our clients out of that. Um, so very challenging. For here's some resources I have for more information. I'll put the actual URL for, we have about 25 people who registered. So they'll all get a recording. I'll send you the actual links that these are hyperlinks. But the Tennessee website has a really good Q&A section. We have FAE 170 where you'll see the calculation of the taxes in case you're interested about that as well. It is if you have to budget for the F&E tax. And also we found that the Tennessee franchise and excise tax hotline has been very helpful as well. Now sometimes they will, when it came to some of the exemptions, they have misled us a little bit. So they're not perfect, but they are very responsive. And certainly for the foundation of things, they can be pretty helpful. Um, Now here's a chance. If any of you guys have any questions on this um, incredibly exciting, eye-opening journey that we just had together, that is probably the highlight of your week. If you have any questions, now's the chance before we move on. You can put them in the chat or the Q&A section. All right. And finally, as one thing you may want to consider doing if you're a little overwhelmed by this stuff, especially if you're a high income earner and it comes to entity planning and tax mitigation, and really not only looking at the Tennessee F&E tax, but someone knows how to plan around it and minimize those taxes throughout your overall federal tax as well. That's our specialization. You can contact us and consider working with us at prospercpa.com/apply. We do have a lot of openings right now because we have hired aggressively. Um, Additionally, if you want to know more, just email me, Mark at prospercpa.com, and maybe I can help you out. Danielle, anything else you think you might want to add to this before we head on out?
No, one thing quickly, I think I may have misspoke. When you do file your annual reports, there is a small fee associated with filing that report. When you file or update for your registered agent, there is no fee associated with that. And then again, when you're filing your business tax return, again, that's if your earnings are over $100,000 of revenue or more. You will have a fee associated with that depending on where your revenue is. So that's not a fee that I can dictate for you. But I think I may have said that there was no payment due with the annual report, and that's not necessarily true.
Okay, great. Fantastic. All right. I hope this clears things up for you. We're here for you. We love helping entrepreneurs and real estate investors achieve your dreams and not get held back by these silly taxes that get in your way, trying to make things as easy and simplistic as possible. And we hope that this helped you along achieving that goal. All right. Danielle, thank you so much. And by the way, if anyone who's our client, Danielle has been a lifesaver for me and our clients. She's a very foundation. She's a very instrumental person in the company. And if you are having your return reviewed, you'll likely hear from her. So thank you very much for your time, Danielle.
Sure.
A- And you guys have a great rest of your week.